Okay, let's dive in. Today we're looking at Bitcoin's recent comeback and interestingly, JT Morgan's quite bullish take for the second half of 2025, especially how it stacks up against gold.
That's right. We'll cover the recent market action, what's actually driving the price, some technical analysis insights, and naturally those 2025 price predictions.
And specifically, JP Morgan's thinking on why Bitcoin might just outperform gold later this year. We'll also briefly touch on what JP Morgan themselves are doing with blockchain.
Exactly. And if you find this useful, please do consider liking and subscribing. It helps others find this analysis.
So starting with the Bitcoin's current market status, mid-May 2025 saw a pretty significant resurgence, didn't it, after being stuck in a range for a while?
It really did. About 10% since the beginning of May. As of May 15th, it was hovering around $103,000 to $500.
So we saw a few different numbers reported around the 15th and 16th, right? $102,000, $119, up to almost $104,000.
Yes, there was some fluctuation. We saw $103,696, $103,000, $125, even $102,896.99. It really depended on the exact moment in exchange.
But the key thing is, it broke $104,500 in that week leading up to the 16th, 17th. That's its highest since January.
Right, putting it within, what, 5% of its all-time high?
Yeah.
Very close.
Although there was that brief dip below $102,000 on the 15th, that was linked to the U.S. wholesale inflation data, wasn't it?
Yeah, that data came in weaker than expected, and there was a broader sort of risk-off mood in the markets, which pulled Bitcoin down temporarily.
And more recently, it seems to have entered a consolidation phase.
Exactly. Trading mostly between, say, $97,000 and $104,000, kind of finding its footing again.
Let's talk about the factors influencing all this. Institutional adoption seems huge right now.
Oh, absolutely. We're seeing more large corporations, more investment funds allocating serious capital. It's not just talk anymore.
They're putting it on balance sheets, integrating it into their infrastructure.
Precisely. And that signals, a longer-term confidence, even if it brings some speculative froth along the way.
And this wider adoption, does it add credibility, attract more diverse investors?
Definitely. A rising market cap does that. And look at asset managers. Nearly 40% are now actively offering crypto products like ETFs or managed accounts. That's a big shift.
Okay, another big factor, regulation. Always a tricky one for crypto.
Always. Government policies can be boosters or restrictors. What happens in the U.S. and China, for example, has major ripple effects.
But is the trend towards more clarity? Is that helping?
Generally, yes. Regulatory clarity, even if strict, is often better than ambiguity. It gives institutions a clearer framework. Pro-crypto laws in the U.S., for instance, are seen as real catalysts.
And we're seeing movement at the state level in the U.S. too.
We are. Several states are embracing it, supporting infrastructure, allowing taxes or payments in crypto. Some even talking about state Bitcoin reserves, like in New Hampshire or Arizona.
But despite that progress, regulatory uncertainty is still the main worry for institutions.
It is. Around 64% still cited as their number one concern. So progress, yes, but still a hurdle.
And what about the tech itself, blockchain advancement?
They certainly play a role. Improvements in efficiency, security, these make the network more attractive.
There was an estimate about smart contracts facilitating a majority of transactions.
Yeah, the projection for 2025 is that over 60% of Bitcoin transactions might use smart contracts. That could boost efficiency, open up new uses.
But the complexity is still there. Could that put some people off?
For sure. It's not simple technology, and that technical complexity can be an obstacle for wider mainstream adoption or even some investors.
Then there are the macroeconomic factors, the bigger picture.
Absolutely critical. Global indicators, inflation, central bank policies, they all feed into investor sentiment.
And Bitcoin is often seen as the hedge against traditional market volatility.
It is, increasingly so. Though that recent weaker U.S. inflation data, that might delay Fed rate cuts.
Which removes a potential bullish catalyst for risk assets like Bitcoin.
Potentially, yes. And the lower producer price index figures also suggest weakening demand, which could, dampen risk appetite overall.
What about the debasement trade we heard about? Hedging against fiat currency weakness.
That definitely helped lift both gold and Bitcoin in late 2024, but it seems to have stalled a bit in 2025 so far.
And there's that historical price correlation with gold too, always worth keeping an eye on.
Always. They often move together, though sometimes diverge, as we might discuss later with the JP Morgan view.
Okay, let's switch gears slightly to technical analysis. What are the charts telling us?
Well, that consolidation phase we mentioned between 97K and 104K. Technical analysts often see that as a potential base for the next move up.
So $97,000 is acting as a strong floor, a support level.
Seems to be yes. And $104,000 is the ceiling, the critical resistance point they're watching.
A break above or below those could set the next trend.
That's the idea. A decisive move either way could kick off a new trajectory.
Are there other technical signals analysts look for? Moving averages?
Yes. Things like the convergence of short and long-term moving averages often precedes a significant move. Also, trading volume is key.
And the volume has been increasing during this consolidation.
It has, which suggests investors are interested, building positions, maybe anticipating a breakout. It often points towards potential volatility ahead.
Any specific levels right now? EMAs or Fibonacci?
Bitcoin's trading above its 50-period exponential moving average, which was around $103,453, and also above the key Fibonacci 23.6% retracement level at $103,376. These are generally seen as bullish short-term signs.
And pattern-wise?
There seems to be a higher-low pattern forming above the 101,926 support level. Plus, the MEXCD indicator, another momentum tool, is turning green, suggesting upward momentum might be building.
And resistance levels to watch on the upside.
Key levels identified are $104,476. That's the immediate one. Then $105,716, and further up, $107,031.
So a break above that first level, $104,476, especially with good volume, could be a trigger for traders.
That's what many technical traders will be looking for, yes. Confirmation signal.
Okay, brings us to price predictions for 2025. There's quite a range out there.
There really is.
Yeah.
A lot of optimism is based on these historical patterns, consolidation leading to rallies.
So if it breaks that 104K resistance, testing new all-time highs is definitely on the table.
It becomes much more likely, yes. But if it breaks below the 97K support instead,
then we might just see more sideways action or consolidation.
that would be the expectation, yes. Further range-bound trading.
Some specific numbers being thrown around. I saw one projection of $220,000 by 2025.
Yes, that one often links back to the gold correlation argument and a specific model, a stepped price curve. There's even a more bullish take suggesting $444,000 could be possible as early as 2025.
Wow. And anything above $250,000 is considered above expectations.
According to that particular analysis, yes. Then there's another scenario looking at market cap relative to gold.
The one where Bitcoin captures half of gold's market cap if gold hits $5,000.
Exactly. That model spits out a potential Bitcoin price of $924,000 by 2030. Highly speculative, of course, but it shows the kind of thinking out there.
But more generally, the outlook seems to be for six figures, possibly as early as 2025.
That seems to be a common thread, yes. Reaching $100,000 plus seems plausible to many analysts this year or next.
And JP Morgan's own long-term target based on their macro view.
They have a target of $120,000, which is bullish, but perhaps more grounded than some of the wilder predictions.
What about prediction markets, like Polymarket?
Right. Looking at Polymarket data for May 2025, the probabilities were interesting. About a 37% chance priced in for hitting $110,000, only 14% for $115,000, and just a 2% chance for $125,000. So tempered expectations in the very near term.
Okay, let's focus on that JP Morgan outlook more closely. Their team, led by Nicolaus Panagurtoglu, expects Bitcoin to outperform gold in the second half of 2025. That's quite a statement.
It really is, especially coming from a major traditional institution. It signals a shift from how these assets were typically viewed. They expect this sort of zero-sum game between the two to continue.
Meaning money flowing into one tends to come out of the other.
Largely, yes. That's been the pattern they've observed year to date.
So why do they think Bitcoin will win out in H2 25?
Several reasons. First, that strong institutional and corporate buying, they see aggressive accumulation continuing, boosting demand. Think firms like MicroStrategy or MetaPlanet setting examples.
And a growing support from U.S. states.
They see that as a major driver too. Plus, the crypto derivatives market is maturing.
How does that help?
A more mature derivatives market allows institutions to manage risk better, making them more comfortable allocating capital. Recent deals and product launches are seen as signs of progress there.
And finally, they prefer Bitcoin-specific catalysts.
Right. Things like potential pro-crypto laws, clearer regulations, political tailwinds. They feel these create more specific upside potential for Bitcoin compared to gold in the near term.
Have they actually seen evidence of this shift in flows, money moving from gold to Bitcoin?
Yes, they noted capital moving out of gold ETFs and into Bitcoin. Futures market data apparently backs this up too, showing declining gold positions and rising Bitcoin positions.
And the recent price action kind of reflects that, Bitcoin recovering while gold pulled back.
Exactly. For most of 2025 until recently, gold was outperforming. But in the week leading up to May 16th, 17th, Bitcoin regained its losses while gold slipped.
Was there a reason for gold's dip?
It seemed linked to a bit of a U.S.-China trade detente, an easing of global tensions. That reduced the demand for traditional safe haven assets like gold.
So JP Morgan's $120,000 target for Bitcoin fits into this picture of it gaining a more recognized macro role.
Precisely. It reflects a growing acknowledgement of Bitcoin's place in the wider financial landscape.
And speaking of JP Morgan and the wider landscape, they've been active in blockchain themselves recently, haven't they?
Yes, quite significantly. They completed their first public transaction using tokenized U.S. Treasury bonds on a public blockchain. That's a big step.
What's the significance of that? Using a public blockchain.
It shows major financial players seeing real value in DeFi, decentralized finance infrastructure. It's not just internal experiments anymore.
And this could open the door for more tokenized real-world assets, or RWAs.
That's the potential, yes. Tokenizing things like bonds, real estate, other traditional assets. It could theoretically bring trillions of dollars of value onto blockchain networks eventually.
Okay, so to wrap things up, Bitcoin's been consolidating around 103K, 104K after a strong run-up.
That's the current picture, driven by factors like institutional adoption, some regulatory progress, tech advances, but still facing volatility and complexity challenges.
Price predictions are generally bullish for 2025, mostly aiming for six figures, though the range is wide. 120K, 220K, some even higher.
And importantly, JP Morgan is forecasting Bitcoin to outperform gold in the second half of the year, citing that institutional flow, state-level adoption, and the maturing derivatives market.
Their own work tokenizing assets on public blockchains just underlines how digital assets are becoming more integrated into finance.
Definitely. It all points towards the growing significance of this space.
So plenty for you to consider there regarding investment strategies and how asset allocation might evolve. This concludes our analysis for today.
We hope this exploration of Bitcoin's current standing and JP Morgan's outlook was valuable. Thank you for joining us.
And if you did find it informative, please do like and subscribe. It helps us bring you more discussions like this one.